Hey folks, this is Peter. Thanks for watching my video. I hope you will like it. Just trying to make it a little bit easier, and this video is mostly for beginners and medium level traders. Sometimes it doesn't hurt to look at things that you already know, and once again, my intention is to make it a little bit easier, maybe point the beginners in the right direction of what pattern is most ideal for them to spot on the charts, and then manage their risk and hopefully become successful trader with enough patience. I've been trading for around 5 years. I started with stocks, and then last 2 years I shifted towards Forex, just because I like the dynamics of Forex market a little bit more, but that's obviously every person is different. So today we'll be talking about the head and shoulder pattern, and once again I believe this is one of the easiest ones to spot, but also the most reliable. And in trading you always want to increase the odds to your favor, due to your side. So this one is definitely one of those. Very clear to see. Once you train your eyes, it's very clear to see. So what is head and shoulders pattern? This pattern usually appears at the end of the uptrend or downtrend. That's why it's considered a reversal pattern. Try to remember this, okay? It's a reversal pattern. In my opinion, this pattern is one of the most reliable formations, with clear zone to take to place your stop loss, and also to project your profit taking zone. It can be applied on any type of security, any type of time frame as well, but ideally larger or longer time frames are a little bit more accurate. Why is head and shoulders pattern happening? The reason why this pattern matters is because it captures the sentiment between buyers and sellers. Stronger buy pressure will run price up. Price will then pull back on when the buyers are taking profit, and then with their pressure again it will continue up until the sellers step in. Then the stronger sell pressure pushes the price lower, and when there's the shift between buyers and sellers, that's the change of sentiment, that's when our pattern occurs, okay? So obviously there's there are two teams, sellers and buyers. They both want to win, but eventually only one of them will win. And then this is what we see on the chart. We don't see the fundamentals, but we see on the chart, and that is the sentiment I'm referring to. Okay, so let's break down the pattern on its own, okay? So if you be looking on the left side, you will see that at first the price formed higher high and higher low by creating the left shoulder. Then the buying pressure continued up, and we formed new high, and that will be the top of the head. And then the profit taking and sellers were kind of on the same game, fighting back and forth, and we price retraced back down to previous horizontal support at this point, right? At that point, the buyers once again stepped in, and we reached another. At this point, we reached lower high or equal high as on the left shoulder, and the price just didn't go up anymore. At that point, the sellers were becoming stronger and stronger, and we were selling down. The price was going down towards the neckline, as you can see. Once you create the neckline, and once the price breaks below the neckline, that's when you would like to enter your trade. That's the most ideal, unless you're more aggressive, etc. But so you can see once the price reaches the neckline on the right shoulder, that means the pattern is finalized and it's more validated, and you should set up your position. As you can see on the right side, there's also right above the right shoulder, there's the zone to place your stop loss order. You should always do that, guys. And from that point, all you have to do is calculate how much money you want to risk, right? Let's say 1 to 5% per your account, and then you just need to measure what is the price difference between the neckline and your stop loss level. Once you calculate your position size, then you will take the order, and then you will either sell or buy the market. And also at the same time you can also set up take a profit order, because as you can see, the height of the head from the neckline, that also projects the price move that should happen in the opposite direction. Alright, so let's finally go into a little bit more details. As you can see, I'm showing you 3 different types of the pattern. Look on the upper pictures for now. You have ascending neckline, horizontal neckline, and descending neckline. And below the lower pictures, you can see I just want you to see it in a line chart and a candlestick chart as well, so you can get a better idea. So all you have to do is start trading your eyes on these formations. Once you're really good at it, you can just run through lots of different charts and just see them straight away. But what I wanted to talk about is all those financial gurus and masters, they always mention the price action, right? The price action is higher high, higher low, and then there's lower low, lower high, right? So in these three types of pattern, I believe, or my most favorite or most reliable in my opinion is the one on the right side, the descending neckline. As you can see, from once we heading down from the head, the price actually puts lower low on the neckline, right? We put lower low and then lower high on the right. I'm talking about the right shoulder. Right shoulder puts down lower low, lower high, and then heads down and then breaks the descending neckline. And if the price action is the most reliable factor in the price movement, and I believe it is, then we should definitely be also paying attention for the higher highs, lower lows, etc. So we selected the most reliable pattern, which is head and shoulders, but within the pattern there's also small details. As you can see, 3 different levels or 3 different types, and I believe you should also go for the descending neckline. This way you can once again increase your odds, and hopefully the trade will be more successful. Alright guys, thanks for watching. I shouldn't say just guys, so I should say ladies as well, just in case there's some lady traders as well. Once again, I just want to thank you for watching my video. I just created it to once again make it easier for people who are just starting, just because I didn't have anyone to give me any advice, so I'm just sharing. I'm not looking to make money on this or anything. Just once again, if I can save you some time, because you will eventually probably find this as well. I tried all different types of systems, moving average crossovers, RSI crossovers, MACDs, etc. But just feel like eventually you will end up studying the price action, and this pattern does capture the price action. I would like to just remind you, always manage your risk. This is not a short-term explosive rich, but long-term, so you want to always preserve your capital, and you always calculate the position sizing, etc. Just what else could I mention? Yeah, just as I say, practice your eyes. Open up Google head and shoulders pattern, and keep studying those formations until you just I think eventually you will become obsessed with it. As I just love looking at charts and formations, and just it's one of my passions, and hoping to get very successful one day. But once again, nice and slow, steady, and making beautiful progress. That's the goal in trading and investing. So thanks again for watching, and let me know if you have any questions below in comments, and I'll be more than happy to go over details if you want to. All right, thank you.